Okay, hello. So, welcome to this episode of the Stocking Profit podcast. Right, so today I want to talk about the top five trading sins you must avoid as a professional trader, right? As a trader in general. If you're a newbie, if this is, maybe just one of those podcasts you're listening to after you're coming into trading, I want to say congratulations to you because this is going to be really important for your journey going into the future. If you're also someone who has been in trading for a while, maybe 1 2 years, and you're struggling to stay consistent and profitable, I think this is also something that's going to be beneficial to you. So, well, without further ado, let's talk about the five trading sins you must avoid. Every successful trader you meet, by the way, will tell you that they experience all of these things before they were able to sort of master their emotions, master themselves, master their weaknesses, and turn their weaknesses to strength. And that is why it's really important to understand these things and actually deal with them headlong. So the first in the list is greed. Now, a lot of people wouldn't realize they're greedy until they start trading, and that is why trading really just turns into a superhuman, in my own humble opinion. Because when you realize that you're actually greedy, it begins to, open you to the reality of having to deal with it if you're actually going to be successful. Now, greed can be a major problem for successful traders who may hold onto a currency pair for too long sometimes. So let's say you enter a trade and then you have your analysis, assuming you've done your work, right? You have your analysis all marked out where price should arrive at and all of that, and price gets to your TP, and then when it's about approaching your TP, you move your TP because you want to extract more from the market. Now, a lot of times that's really greed sort of screaming out, okay, out of you. And that is something you have to deal with, right? Because you want to make even greater profit. And what ends up happening sometimes is the price would now reverse on you. And when price reverses on you, you begin to beat yourself. Oh, I should have just taken my trade. I should have just taken my profit and all of that. And you begin to say, oh no, I'm greedy, and you begin to really just beat yourself. And sometimes it may even happen that you move your TP and then price actually goes on to hit the new TP you set. But even at that, that is still great play now. Because what is happening is that you're not following your plan. You're simply just trying to extract more from the market, even when you know that you're actually breaking your rules. And that is something that in the long term will affect you. Okay, and as a trader, that's something you have to deal with. So greed is number one sin that you have to deal with. The second sin you have to deal with is fear. Okay, now fear can cause a trader, for example, to either sell so quickly or to avoid even taking positions altogether, and that ends up making you to miss out on potential profits. And this could be as a result of many things. Let's say, for example, greed played out in your previous trade. You're supposed to take your profit, but then because you were greedy, you moved your TP, and then price reversed on you, right? You become scared, and that begins to affect you, your next trade, because now you're afraid of taking the next trade. Instead of you jumping the next trade, you're now afraid and you're scared, right? And then you end up missing potential opportunities, and sometimes it might just even be depression. You just become depressed, or maybe you just become discouraged because of something you've done previously that affects your next trade. So that is why it's important to ensure that you deal with these sins, because these sins completely affect you in the long run, and you have to deal with them headlong, right? So this is basically the second fear you have to deal with, and it's important to really be realistic with yourself, review your trades, and then when you see these things, deal with them. And then the third sin you have to deal with is impatience. Now, impatience can lead, a trader to make hasty decisions, exiting a position, too soon, missing out on potential profit and all of that. You have your analysis done. You've marked out your charts. You've marked out your entry, your stop loss, your take profit. And now the trade is going in profit, and then instead of you probably maybe just going on to do something else with your life, you stay on the charts, and then you're looking at the charts, and then the candles, the candles pulling back, and all of that. And instead of you to just go do something else, because you're stuck on the charts, you're looking at the chart, your emotions begin to just fly all over the place. Okay, it's just going up and down. You just, oh my god, if this thing just reverses with me, I may lose. I may lose, on the profits that the market is giving me at this point in time, and then you're just all over the place. Okay, and what ends up happening is that you end up taking profit too early in the journey, and then that also affects you because price goes on to hit your TP, and then later on you're like, oh my god, I should have just let the price do its thing. It should hit my TP, and then you begin to beat yourself again. And these are just things that you have to deal with as a trader, because if you don't deal with impatience, it's going to affect you in the long term. Okay, and you have to learn how to deal with these things, because if you are taking profits before it hits your TP based on your analysis, that's going to be a bad attitude that you're going to build. Okay, and it's just going to stack up, and before you know it, you're going to have all of this backlog of potential profits that you could have made if only you stuck to your plan, right? So impatience is something you have to deal with. If you enter a trade, my advice usually would be that if you enter a trade, and let's say for example your trading plan just says, hey, one position and that is it. So if you enter a trade, why you stay on the chart? If you know you're not, if you haven't put in the work to an extent where you can actually be looking at the chart and at the same time not do something really out of plan. If you haven't got to that level, then why do you stay on the charts? Just leave the charts, right? Go and do something else, and just put your alert at your stop loss and your TP. Whichever one gets triggered, then you can come and look at the chart again. And that's the best way, right? Until you're able to develop yourself to the extent where you can actually enter a trade and you can be looking at staring at the chart and you do nothing. If you're not at that level yet, then you have no reason looking at the chart after you take a position based on your plan again, right? You're taking a position based on your plan, not impulsive, trades and all of that. So that is the third sin you have to deal with and you must avoid. Now, the fourth sin you must avoid is overconfidence. Now, overconfidence can lead traders to take on too much risk and make irrational decisions. When you're too overconfident, let's say for example the previous trade you had was like maybe a 1 to 5, 1 to 10, maybe 1 to 15, who knows, right? And then you just feel like you can smash the market now, and then all that is in your mind is, okay, I made it 1 to 15, so even if I lose a bunch of trades, it's not going to take out all that I've made 1 to 15. And then you just become reckless. You begin to just take trades without really paying attention to your risk. Let's even say in a day you have a risk threshold of risking just let's say 1% of your account or 2% of your account, depending on how much you're risking per trade. But you hit that and then you're still going on because you're overconfident. You feel you've made a lot of money the previous day, 1 to 5. So even if I lose 10 trades, maybe you made 1 to 10. You say, even if I lose 10 trades, it's just going to take me back to break even. That's a very bad way to really build your trading career. So you have to, overcome overconfidence. Literally, you need to overcome overconfidence, because that is also going to hurt you in the long term, in the long run. So it's something you have to deal with. Okay, you have to tell yourself the truth and don't just assume that, okay, because I've been successful before, I will be successful this time around, and that becomes a precursor for you to be reckless. No, you have to deal with that. Okay, so that is the fourth sin. And then now the last sin I want to share with you that you must avoid is revenge trading. You have to avoid it. You have to deal with it. Revenge trading. You must have in your plan the threshold of the number of trades you have to take per day, and then you call it quits. Because if you don't, and you're always you're trying to trade in revenge, the market is going to take more from you. And those who last in this game are not really those who are reckless. It's actually those who last are those who actually take their time, to follow their plan, to follow the analysis. I know it is easier said than done, but if you're going to become elite in this game, this is what you need. This is what you have to do. If you don't do this, then you're just going to be average. You're just going to be like every Joe who just comes into trading and then tries to do something, and after a while they're gone. You don't want to be that kind of a person. You want to make money in trading and then take that money and put into some businesses or investments and all of that. That's the reason why you're here. So you have to really get your acts together if you really want to succeed. Okay, so revenge trading, It's a major problem for a lot of people, because what then happens is when you revenge trade, you take unnecessary losses, and then eventually when you get your setup and then you take the right setup, all you're doing is you're recovering your losses. And that's what revenge trading does, and that's why you have to deal with it. Okay, so hey, so in conclusion, basically, right, so as a trader you must be aware of these 5 trading sins and work to avoid them. You have to put in the work. I'm not saying it's going to be easy, but you need to be aware of them and then work towards avoiding them, right? A successful trader must remain disciplined, must remain patient, must stick to a well thought out trading plan, recognizing that the currency market, right, is unpredictable and ever changing, right? There is no single trade that is for certainty is going to hit your TP. Every single trade you take based on your plan, the only thing that is certain is that it's going to hit your stop loss. That's the only thing that's certain, right? What is uncertain is if it's going to hit your TP, right? And then of course that's why you have to stick to your plan, because if you don't stick to your plan, you're reducing your odds to win, right? You're stacking up, the odds are stacked against you. So if you're not following your plan, you're just adding more, you're just adding more to the mix of the different factors that will cause you to fail in this game. So you have to understand that you must stick to a very well thought out plan. Review your plan, modify your plan to an extent where as you discover your weaknesses, you work on them, you look at your plan, you modify your plan to ensure that your plan is actually reflecting the things that would help you to succeed. Now you must also recognize that I've mentioned that already, that the currency market is ever changing and unpredictable. So but when you avoid all of these 5 trading sins, then you'll begin to see your potential for success increase, right? Because now you're dealing with the issues and you're taking out all the bad factors that are leading that basically just leading to all the losses and all the failures that you're seeing in your trading career. And then now you can begin to inch towards success and the sustainability of success. That's also something I'll talk about some of the time. But so what you want is not just once in a while home run. What you want is sustainable success, consistent success. And for that to happen, you need to be disciplined, like super disciplined. Okay, so hey, that is it on the top 5 trading sins you must avoid on the Stocking Profit podcast. I want to believe this is beneficial to you, and hey, just hit me up in the charts, whatever you listen to this, or maybe just reach out to to me on any of the social media platforms for Paruto Capital, and I'll be glad to engage with you. I want to believe this is beneficial to you. Hey, stay stuck in profit and see you next time. Bye bye.